Good morning, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is June 23rd, 2013. This is your weekend video. Lots to talk about, so let's get started. Actually, there isn't really that much to talk about, but versus what my previous video I released on the intro week, which was just a few days ago, everything pretty much stayed the same. I had an alert here at say 157.36. I think it was 157.37 or 39 or something like that. But the low on Friday was 157.47, so I didn't get that alert triggered, and therefore I was not able to take a long position on Friday. I wanted to take a long position on the 157 level. It got pretty darn close though. It was the low was 157.47, so about 47 cents off. In any case, let me remove. Actually, these trend lines here should stay. This one can be removed. These are now going to be your resistance points. You have a resistance point here. You have a resistance point here, and you are currently into resistance now, or almost going to get into resistance. So you have three resistance points here that the bounce will need to get through. So do I think there's going to be a bounce? There is a high possibility that we should be getting a bounce. I don't think it's going to be a long-lived bounce. We've broken through so many support levels on Thursday that the recovery on Friday, looking the way it is on Friday, it doesn't look like a very strong recovery. Granted, this is a reversal candle. This is a hammer formation candle, formated candle, I guess you could call it that. It didn't have three candles down before it made this candle, however. In addition to that, the volume was lower. So when I talk about volume, I talk about, and this isn't always, I just want to keep reminding people, it's not 100%. However, what you want to see is a volume like this, or higher volume, right? And then you see the volume taper off. Once you see the volume taper off, and then you see a reversal candle such as this, that's into a support or resistance level, and then you see a spike in volume, that normally indicates a probability of a reversal happening. Okay, so one good example was here from this high volume mark here. That would be this candle, and we just went up while volume went down. So volume will taper off. Then you'll get a reversal pattern. In this case, it was two candles. This is called a you could, I forget the name of this reversal pattern. Hang on. Alright, this pattern is called the piercing pattern. Let me just zoom in here. Well, that's a little bit too much. Where the candle is above 50% of the previous candle and then drops and closes below that candle. Okay, so this is considered a reversal pattern. It's a two candle pattern, reversal pattern, and the candle that completed the pattern was on high volume. See that? And that normally indicates a reversal, and therefore we reversed. Okay, so we want to look for the same thing. When we reversed, which was Thursday, we did that on substantially high volume. This volume wasn't we didn't have this kind of volume for over a year. Okay, and then now we're tapering off again. You can see on Friday's volume was a little lower, so we're just tapering off here. Okay, what I want to see now, again, granted we could get a reversal. That's not something that would be unheard of. I would expect after a down move, such a big down move like this, we may see some sort of bounce, but I don't think that the bounce is going to be long-lived. At least that's not what the charts are telling me. The charts are telling me that we still have more downside. We still need to create more of a taper on the volume in order to get that reversal signal to get some sort of bounce. And another thing I explained in the previous video too, let me just reload my drawings here. Take this guy out, save this. Is we created a lower high here. Just keep that in mind. And now, even if we get a reversal on Monday, this is a lower low. This is a change in trend. The trend is now down. Okay, this is the beginning of a downtrend, but short term, because this is a daily chart. Okay, keep that in mind. Until I see some significance, this is going to be considered a change in trend, but in the daily chart. Okay. Now, in the longer term, this is what makes it a little bit difficult. Let me just delete all the lines here. This is what I meant about an overextended market. Boom, boom, just like that, right? We hadn't had a pullback. This is a pivot here. This is a pivot here. This is a pivot here. This could be maybe a pivot here. I wouldn't consider that a pivot. So on and so forth. Do you see any pivots here? Not really. You have small little consolidation patterns and then bounces here and there, but you don't see any pivots. This is the pivot. This here, this candle here, will be the pivot. This was the candle that the 165.80 level, my last mathematically calculated level, was able to calculate, and then now we're starting to pull back. On the weekly chart, we had pulled back right into the 20 moving average, which is why we're seeing some support here. The question is, are we going to close below this 20 moving average, or are we going to bounce off this 20 moving average and go back into this wild overextended market? In which case we would create a pivot here, and this would also be a pivot, considered a pivot down here, and then we would continue higher. This here would be a very small correction, but the correction that I've been talking about for a very long time. Granted, someone can say, I've been calling a correction and now it's happening. See, I told you I know what I'm talking about. I can say that there's going to be huge corrections starting from today and keep on saying it for about 5 years straight, and then finally get a correction, a huge market crash, and then start bragging about that. Right now, I'm neither bullish nor bearish. The point being, when the market goes up, I am going to go long, and when the market goes down, I am going to go short. It doesn't matter to me. Right now, though, if you ask me a question for the long term, the trend on the weekly is still up. Nothing has changed on that. In order for this trend to change on the weekly, I would say we would need to close around this area here. Okay, this area here is going to be really, really good support if we can get there. Okay, but on the weekly, in order for this trend to change, we gotta close down here. Sorry, we gotta bounce off over here, and then start. Can you see what I'm talking about on how this market is not a very healthy market when you just go straight up? Because now when you make your trend, it's gotta come down very far before you make a lower low. Okay, then again, this is just my opinion. I know a lot of other guys out there will think differently from me, but this is just my opinion. This is the way I trade, and this is how I've learned over the years of how to look at charts. Okay, so I rarely look at the weekly. I look at the weekly for more of a confirmation kind of thing, and this is why I think that we may get a bounce sometime next week. That's because the weekly chart is in the 20 moving average, and therefore we could bounce off that 20 moving average into, say, one of these resistance points before coming down again. Now again, with the federal manipulation out there, you have to be wary, you have to be careful, and you have to put in your stops, because they are out there, and they are out there to manipulate the market. Right now they're seeing that everybody is short, so they're gonna try and short squeeze people. Okay, you're gonna have to watch out for those. You're gonna see a lot of volatility in the markets in the coming weeks, and that's just the way it's gonna be. So just keep your eye out, and make sure you got your stops in place. Another reason why I think that there could be a potential bounce other than this reversal candle here, just remember, volume does not confirm this reversal. Okay, so this reversal isn't a strong one in my opinion. So on the weekly chart, the 20 moving average bounce is valid, but this candle here as a reversal candle, I don't think is a valid move. Okay, and again, the weekly will be a lot stronger than the daily, but this will be the first time. This is the first time that the weekly chart would get into the 20 here, right? So we come into the 20, we come into the 20 here, we pierce to it, we kind of trade along it, and then ever since then, we never looked back. First time we're going into the 20, which means the 20 should give us at least somewhat of a bounce there. On the daily chart, what convinces me that we could get a bounce is that, remember in the previous video, Whenever you have a breakdown or a breakout of something, you need to confirm that move, validate it. We did not close below the low of this candle. We closed here at 159.07. The low of this candle here was 158.98. Okay, so we did not close below this Thursday's candle, which tells me that there's a good chance that we could bounce. I'm not saying the markets are strong at this point, but I'm not saying that the bounce is going to go through the roof. I'm saying that a bounce could happen. This could have happened also on Friday because of Friday was the last day options could have been traded, and they expire on Saturday. Also, in addition to that, because it was at the end of the week, and because everybody's familiar with federal manipulation, everybody is covering their shorts, in which case you see a small bounce in the market. If that happens, then we could see a small bounce into the 50 and then start heading lower. It could be that soon. I can't really tell you. It doesn't I can't predict that, but I can say that it does look on the weaker side, meaning I don't think right now at this point in time that the markets are looking strong at any point. But just keep in mind we could have big reversal candles like this one. Okay, so it wouldn't surprise me to see the Feds come out and say, you know what, just kidding, we're going to do QE, 1 million thousand whatever, QE 10, and we're going to print $100 more trillion. Then we'll see a huge spike in the markets once again. But just keep that in mind. If we do head higher, I do expect a lower high. Okay, so we could go up to say here, and then I could actually literally, here, let's just do this. If we do spike up, I do not think, let me bring in my other chart system here. If we do spike up, I don't think we're going to spike up past this upper trend line here. Okay? So this trend line here, if we do spike up, I don't see us passing this before coming down. Why? Because the trend has changed. Alright? So just keep that in mind. If we do break down, I could just literally draw this line like this. Let me just change my drawing once again. Say we do bounce. If we do bounce, then this would be the trend line that I'll be watching out for when we come back down. Okay? But this remains to be seen, so we'll see what happens on Monday. But that's pretty much what I'm looking at. I'm not more bearish than I am bullish, but on the short term, in the very short term, I do expect some sort of bounce. That would not be surprising. I wouldn't make a long trade here for a bounce because it didn't hit the 157. It's already closed all the way up here, so that would be chasing to me. Had it gotten into the 157 level flat, I would have taken a long trade. It would have in one day made this move higher. Okay, let me zoom in here. Let me just delete all of this and tell you guys how I would do it. It was 157 flat. Alright, had we come down into the 157 on Friday, I would have initiated a long trade on the SPY, and then it would have went all the way up here, right? And I would have already had a break-even stop. Meaning, if it did go against me on Monday, it would come back to the 157, stop me out break-even, and I'm safe. No big deal. But because it never got into the 157, it got close, but it never really got there, then I will not take a long trade based on this candle formation here. The reason, there's no volume, there's no there's no volume play here. On the weekly chart, yes, there is a bounce on the a potential support level at the 20 moving average, but I also don't see a reversal on the weekly. You have to remember that I'm not going to only say, oh, it went into the 20, I'm going to take a long trade. Well, we do have consolidation here, so that would have been a second factor, but in any case, it's already bounced off to 20. If had I taken it at that price, which was 155 something here, then okay, no problem. As you can see, it bounced off to 20 already, and I would already have a break-even stop. Okay, and that is how I protect myself from federal manipulation. If I don't get in at the price I want it for, then I just don't get in. I find something else. I look for a different stock, a different ETF. It doesn't matter. There's thousands of them out there. I just look for another one with the pattern that I'm looking for. In this case, the SPY is dead to me. Now, if it does go into the 157 level on Monday, let's just say it reverses, I would actually wait till we get into the 154.77 because we got already close to the 157 level. I would actually, well, okay, let me take that back. If the hourly chart looks prime for a bounce, then I may take the trade at 157 because then that'll tell me intraday we may actually get a bounce. But if it does look a lot more weaker than it does look stronger, weaker meaning the bears are taking over short term, then I would actually wait till we get to 154.77 before taking a long trade, if it even gets there. I don't even know if it's going to get to the 154.77. Okay, but this video should be short because you can combine this video with Thursday's intra-week video, and that's pretty much does it for the SPY. And to Favco 2010, thank you very much for the concern. Yes, I was sick. I had a fever. I don't know what I had. I don't know if it was if the flu or anything like that. But I appreciate the concern, and I appreciate you watching these videos as well. And I hope you guys have a good trading week next week. God bless to you all, and I hope to see you in the next video.